You're watching Dukascopy TV. I'm Darren McDermott. I'm joined on the line by Christian Schulz, Senior Economist at Berenberg Bank in Frankfurt, to have a look at the latest data from Germany. Now, first of all, Christian, looking at German unemployment, it fell for a third month in February, declining more than economists actually predicted. Now, this is a positive sign that companies are becoming more bullish. Do you think we will continue to see a drop? And do you believe the German labour market will continue to strengthen?
Indeed, it looks positive. The growth in the economy, which started back in Easter last year, is finally feeding through to the labour market with the usual lag of about half a year. Unemployment falling, employment, which is even more important, rising strongly, in particular core jobs, those which are liable to social security contribution. So the job creation leads to more safe and well-paying jobs, and that should overall translate into higher consumption as well. Germany is on a good track, and the labour market is just one more sign of that.
The consumer price inflation in Germany fell unexpectedly. Now, this has fueled speculation that the ECB will implement additional monetary stimulus. Are you concerned about deflation, and do you think this data could be addressed at next week's rate decision?
Yes, Germany's inflation rate fell in February unexpectedly, mostly and almost exclusively indeed due to the mild winter, which led to lower energy prices. Heating oil, for instance, became much cheaper in February. Remember that last year we had a very, very cold winter at this stage and also into March. So it looks likely that German inflation will stay low also in March before it then maybe hopefully recovers in April and beyond, when the stronger labour market feeds through to higher wages and thus higher consumption, higher prices and higher inflation as well. But in the short run, indeed, the pressure is on the ECB. Next week, they're meeting to discuss whether or not to cut rates. The economy seems to be progressing according to plan. Most of the data that we got from the Eurozone was positive. Inflation still weak, and given the German decline, maybe even weaker in February. We'll find out tomorrow. And that leaves credit data as the last remaining gap, which came out this morning for January and showed that companies and households were still not borrowing from banks or banks not lending to them. So there's weakness there. So overall, a bit of a mixed picture. We don't expect a rate cut from the ECB at this stage.
Christian, what are your thoughts on the other data we saw this week from Germany?
Well, the most important data from Germany this week was the I4 Business Confidence Index. This is the most widely followed indicator of how the German economy is doing. In particular, the expectations component is very closely correlated with investment growth in Germany usually. Now, the indicator was robust. It rose quite nicely in February. However, there was a divergence between the forward-looking expectations component, which was slightly weaker, and the current assessment component, which assesses how the economy is doing at the moment, which rose sharply. So it seems that the businesses in Germany are slightly less optimistic going forward, maybe due to the turbulences in emerging markets, which affect Germany as an export-driven economy, while for the current state of the economy, they are increasingly optimistic, which could mean that we will see a strong first quarter of growth in Germany.
Christian, as always, it was a pleasure speaking to you today. While viewers, do stay tuned as we have plenty more economic updates heading your way.